What did Budget 2017 have in store for the financial markets and what are the implications? We begin this conversation with Adrian Mowat from JP Morgan. Adrian, many thanks indeed for joining us today. What did you make of what the finance minister had presented today?
I thought the budget was very refreshing in what seems to be a very difficult policy world. We have a reform budget continuing. We have a budget that's about transparency, widening the tax base, a consistency in orthodox policy. It's very encouraging in the world that we live in at the moment. And I think that there will be a general positive tone taken from this budget. Even though one doesn't necessarily see a big revelation in tax rates, the focus on spending, I just think it's a reassuring reform budget.
Specifically with respect to budget deficit, Adrian, the fact that he's stuck to about 3.2%, marginally slipped from the 3% target, is that a cause of concern, or has he pretty much toed the line?
I think the way people are looking at these numbers is there's a lot of uncertainty around tax revenue. So there's an upside argument on tax revenue that with demonetization, with a broadening of the tax base, that personal income tax income could beat expectations. And that would be the upside surprise that would allow them to sort of hit the 3.2. You could also argue in the other way. We've got a degree of uncertainty in the economy, courtesy of demonetization. I think the corporate sector is still going to be a little bit wary about capex. They've lost the trend in their business with the noise around demonetization. It's also been preoccupying businessmen's time, working out how to run a business without cash. We've got a delay now in the implementation of GST. And I think, again, businesses will be cautious around the implementation of GST because it'll be difficult to determine a trend in terms of revenue, inventories, etc.
What about the markets, Adrian? How do you think the markets are going to digest this from here on? Do you believe this has enough fuel to take the markets higher?
I don't think so, because you've got some good stories around housing and infrastructure, but these were already areas where the market had a preference for good reasons. I mean, I'm very bullish medium term on the overall housing market in India. The Indian housing story is much smaller than China at this point. It's a similar size population. You get the Real Estate Reform Act, plus some of the measures taken in this budget. And I think the speed at which housing industry develops is going to surprise on the upside. But the ways to participate in the market are still relatively limited in terms of the market cap of property developers. The building material stocks, which we still like, we like at relatively high valuations at this point in time. And then if you're looking at the housing finance companies, their market cap is small relative to the overall financial center. So I don't think this budget in itself will drive a sustained move in the Indian market. We're quite concerned about two very big sectors of the Indian market, healthcare and IT, which are adversely affected by US policy. And we are underweight those two big sectors. And it would require a change in the US as opposed to a change in India to make us less cautious on those sectors.
I'll come to sectors in a moment, Adrian. If I can just push the point about broader flows. Do you expect capital flows in this calendar year to be enhanced? Will the budget, in a sense, trigger higher capital flows into India?
No, I think flows into emerging markets will be better this year than last year. If we were having a conversation 12 months ago, EM equities were hitting new lows, commodity prices were falling. We'd had that precipitous fall on the first trading day in China. And so capital outflows was a big feature of the first quarter. You then got a recovery in markets and some capital inflows beginning to come in the third quarter. I'm talking about EM in aggregate as opposed to specific Indian FII numbers. I think for this year, we've started the year with investors positioned bearishly in emerging markets. We did see outflows post the US election, but in the last couple of weeks, we're now beginning to see some inflows. And I think if we do deliver double-digit earnings growth, which we're pretty confident of in the emerging world, the dollar isn't strong as people fear, then capital will return both to the equity and the fixed income markets in emerging markets, and India will benefit from its share.
You alluded to concerns on healthcare and IT thanks to US policy. You also spoke about housing finance. Is there anything else in this budget that makes you favorably look at some of the sectoral plays or review some of the sectoral plays?
I mean, it reinforces our positive sector biases. So we were long building materials, we're long housing stocks going into the budget. It's come through in an attractive way. We've tended to avoid consumer staples as expensive defensives. I think to some extent you get a relief rally in this budget, as it doesn't really make much sense to change excise taxes just ahead of implementation of GST. So there's a sense of relief that some sin taxes weren't increased.
We've also seen the government announce borrowing much lesser than last year, or much lesser than expectations at least, Adrian. What do you think this will mean for the bond markets and your own outlook for the government 10-year paper?
Yeah, so I think there are a number of factors at work here for the bond market. We do need to be conscious that we're forecasting 3 interest rate increases in the US. We're forecasting US long bonds will finish the year at 2.85. So there is an upward pressure on global yields because the major reserve currency is increasing interest rates. That said, the environment in the emerging world tends to still be one of very modest inflation, no need for policymakers to be raising rates, and still a hope that we might actually get some slightly lower rates in some of the bigger EMs such as Brazil and Russia. So I think there's some conflicting forces at work here, but I don't think you'll get a sustained reduction in long-term interest rates in any of the emerging markets because of what's going on in the US.
The broader economic story has gotten a shot of reassurance by the finance minister in this budget, Adrian. What does that do to the Indian currency? And would you consider investing or buying the rupee? I mean, if you look at it, emerging market basket of currencies as a whole.
Yeah, so there's quite a lot of interesting things going on in EM currencies at the moment. If we reflect on the rupee last year, it was remarkably steady in terms of it finished the year at the same level it started the year. Around that, you had quite large falls in things like the Mexican peso, the Turkish lira. Against that, you had the recovery rallies in the commodity currencies like the real and the Russian ruble. I think for this year, I would be sort of cautiously optimistic that you get a firm rupee, but just a sort of modest appreciation, and it would be built upon an okay environment for capital flows. But I don't think that's a big part of the investment case for buying into India. I think you're buying into India into the selective growth stories.
One final question, Adrian. What is it that you expected to see in this budget that didn't come through?
Gosh, what did we not see? Well, there was hope of lower corporate tax rates. So for smaller businesses, maybe that came through, but not for larger businesses. And this roadmap has been talked about for a while, reducing the corporate tax rate. So I think that would be the main thing I'd focus on. Perhaps we also had a degree of light relief, that there was no change on capital gains tax, which had been rumored, which I think obviously will help market sentiment.